themselves as an entity, but they still need to get the relevant license from the regulator. And so lawyers then can come in to facilitate that process because they understand the legal language. Whereas you find that the people that run the fintech company know what they want to produce, they know what goods they want to sell to the market. They know that they want to bring in a service that is fit for the consumer, where they want to per se sell digital lending products or payments products. But they need to understand the legalese, or they need to be able to speak what they need to speak regulator, and they can't most of the time, and that's where the disjoint comes in, or why they failed in the first 5 years. And the lawyer comes in to bridge that gap, to speak a regulator and also speak fintech, and to help the two speak to each other and bridge that language or miscommunication to help the fintechs last longer than where they break up or where they normally would fail, and help them and help innovation actually take root in an economy where, in this case, we're talking about Nigeria. So this is where you see that the lawyer can serve the fintech industry. So what are we talking about in practical terms? The lawyer can come in and actually read what a license for payment, like third-party payments provider requires, and tell them that, okay, you need to have this much you need to have this level of data protection, or this amount of cybersecurity systems to be able to access the data from people, and that way the fintech will translate it and implement the correct systems, the correct protections, to then be allowed to access the APIs that gives the fintech access to people's personal information, to process that information, to help them be a budgeting app, to be a financial planning app, to be a wealth check, and so on. And that way, that facilitates the growth of the app or the fintech, while also enabling it to be in compliance. So this is where the lawyer can come in the fintech industry to really be a key catalyst of its success. So another question I wanted to jump into that was quite interesting to me was, why is cryptocurrency easily facilitated in Western countries compared to Nigeria? And I think that with this question, you need to take a step back and not look at it at face value in just the sense of why is cryptocurrency growing more in Western countries than in Nigeria, because you need to look at what are the prerequisites for cryptocurrency to grow. So cryptocurrency requires reliable electricity, fast IT systems, and knowledge of the cryptocurrency systems, blockchain, how to mine it, and so on. And then you understand why it flourishes more in the developed world than in the developing world. Because then you see that they have all the prerequisites for it to flourish. Whereas in the developing world, or I can even speak more broadly than just Nigeria, but so even South Africa, where the two countries are comparable, there still are some structural requirements that need to be worked on before the cryptocurrencies can flourish, such as developing the skills required for people to successfully mine them more. The computing power that is required is still not as widely available. That way, once those prerequisites are covered, you would actually see cryptocurrency easily facilitated in Nigeria as well as in the Western countries. So just to touch on this and give an overall thinking around it, um, even in the commercial development of fintech, is stepping out, was moving on from the legal development of fintech. On the commercial development of fintech, we need to think about the business models, and I know that we discuss this even more depth as we continue in this mentorship journey. That in the commercial development, you need to really consider and understand the business model of which type of fintech path you want to take, because there's different models. There's the payments, there's the wealth check, the lending. And you need to also look at the different segments in Nigeria and see which ones are more the leading segments are, because they are leading for a reason. And then you understand that, okay, there's payments, which is always leading in almost every country. Why is it leading? Because it's the most used. And that way, in your commercial development, you can do the market research. And that will also be a good guide to go in the path and choose your development of your fintech, and also in understanding the market, because you can't develop your commercial model without understanding your market and your addressable market as well in developing that commercial study for the fintech you want to grow. So let me pause here and give the floor back to you for the other mentors to talk. Thank you.
Thank you very much, Ms. Nawazi. I'll call on Mr. Senator to also give us an overview on the topic. Sir, you are muted, sir.
Yeah, thank you. Thank you very much. And thanks to the platform for making this happen. Noah, as Noazi has given a very fine intro to this. I wouldn't want to repeat some of the points she already made. I'd just like to say that if you're out there, whether you're a lawyer or a future lawyer, you want to be a policymaker, you are at a very exciting time in human history. And I say that because a lot of disruption is happening, not disruption in a negative way, but disruption for the purpose of improving innovation, improving the solutions out there. When it comes to the fintech space, as you already know, it's all a combination of finance and technology. And the central idea is to be able to provide innovative solutions to problems faced in the financial services industry. The financial services industry is a very large one. And as it is today, it's one of those, based on the statistics I've seen, the financial services industry gets to attract the highest level of innovation most times. You know, if you talk about AI, talk about blockchain, talk about big data, IoT, and all of that, you find that usually adoption is around financial services, way more than other services, other industries such as education, agriculture, health, and all of that. So financial industry continues to lead in terms of adoption of innovation around financial services. I'd just like to point out, right, that it's great that we have distinguished between legal developments of fintech and commercial development of fintech. That distinction is very important because when you look at, I'll start with the commercial development of fintech. Without the commercial development of fintech, there will be no need for legal development of fintech, because commercial development really hinges on innovations, right? Business models built on the technological innovations coming up in the financial industry or services industry. So it's good that as lawyers or future lawyers or policymakers, we understand that distinction, so that when we are looking at the developments going on in the fintech space, as far as commercial development is concerned, we will be focused on those business models across payment solutions, across lending, across wealth tech, such as investments, crowdfunding, and the rest of them. So that's really it. And why this distinction is also important is for us to understand that you don't ever have legal development going ahead of commercial or technological developments. Most times, legal development is a response to commercial and technological developments. And that's why you will find that in less developed countries or regions such as Africa, Latin America, and some other regions that are less developed compared to the Western region, you find that we usually struggle a lot with balancing innovation with regulation. That's because usually the innovation appears to always, as far as technology is concerned, appears to always come from the Western markets. And so you struggle to regulate. You're not sure how to regulate, because really, if you look at AI, you look at blockchain, you look at all of these other innovations, they usually come from outside of Africa. So how do you provide an African response to a Western solution or problem? So I again say that this distinction is very important. Having said that, looking at the legal development part, as lawyers, we understand that legal is something that encompasses both policy and regulatory responses to developments. So when it comes to legal development of FinTech, you're really concerned about those policy frameworks, those regulatory frameworks, and other legal protection that have been provided or will be provided to ensure the safe and secure and vibrant application of the commercial aspect of FinTech, right? And this is where the risk and opportunities come in. As with every innovation, there will be risk and there will be opportunities. There will be strengths and there will be weaknesses. There will be opportunities and threats. As it is today, there are amazing opportunities in the FinTech markets. What law tries to do is to see if there could be a balancing between innovation, which is the commercial aspects, and regulation to ensure that consumers are protected, to ensure that players and users of FinTech, users in FinTech space are also protected. This cannot be overemphasized. There are today several risks that have been created by the innovative solutions in payments, in digital lending, in buy now, pay later models, and all the rest of them, including cryptocurrencies. There are huge risks in those areas. To be able to manage those risks, you must ensure that you are able to provide all of those required frameworks. And when I talk about frameworks, you're looking at consumer protection frameworks. You're looking at investment protection frameworks. You're looking at data privacy and protection frameworks. You're looking at even regulatory licenses, registration frameworks. So these are the things that we need to pay attention to. And in the course of my work, around of 2 minutes, in the course of my work as a FinTech lawyer or a lawyer that advises players in the FinTech space, I find that you will always need to understand the business of your clients. You need to understand what your clients are up to. You are not going to be that fire brigade lawyer in this space. It's not a space where 90% of the work is litigation, as you would have in places like maybe real estate or something. This is a space where a lot of the work is transactional work, policy work, regulatory work, compliance work, all that needs a lot of attention to detail. And also, you have to have a big eye in terms of vision. You need to understand where your clients are, where they are going, and where they are coming from. so that you can be more proactive in terms of solutions. So I would say that you guys are at the time in history where a lot of disruption will continue to happen. What is important is not to be thrown, to the east and to the west over these issues. What you need to understand is you need to understand the principles, right? This is what we call the fourth industrial revolution. We know where we've been coming from, right? From the first to the second to the third, and now the fourth. What you need to know is that a lot of things in this industry, or in this fourth industrial revolution, will be driven a lot by data, right? So you need to pay attention to things around data. All that FinTech stuff we talk about, from ability to lend, from payment solutions, even embedded finance like e-commerce, real estate, stereo tech, all the rest of them, they all depend on data. Even blockchain is just a technology that helps you secure your data. So these are the things we need to know so that we're not too carried away by just the technology, and then we fail to understand the context, the historical context. And that is why, rounding up now, I always tell regulators and policymakers and the governments that this is not about this, we don't like this, we're going to fight this. It's not at all. When you have that approach, it means you don't understand the context. This is a change that no one can stop. So it's not about what you will do, it's how you will do it. Yes, I've rounded off this.
Okay, sir. Thank you very much, Mr. Senator, for that overview. And I will be calling on the last mentor for today, Mr. George Onyewuchi, to also give us his talk on the topic, legal and commercial development of FinTech.
Hi, good afternoon, Hussein. Can you hear me?
Yes, we can hear you, sir.
Oh, okay. So I'm just moving a bit. I'll get my video on later. Well, I mean, it's good to be here again, and welcoming everybody into this current cohort. So just a little opening here. Legal and commercial development of fintechs. Senator, I mean, made quite some very salient points. Also, the first speaker, especially for the fact that the commercial side and the legal side, while they are intertwined, they also run not sequential form. Most fintechs, fintechs are typically not started by how conventional companies, are formed most of the time, where you sit down, do what you're planning, to go register the company, go to the shop, start doing things. A lot of time, people are inspired to solve problems using technology in different ways, and they jump into testing an idea, right? They have an idea. This is how that commercial development goes. They have this idea, they try to think about how they can use this idea to solve a particular problem. They have some hypotheses that they want to test, and then they develop a product, an MVP, or what you call a minimum viable product, something that supposedly solves that idea, and they throw it out there in the market to see if people use it and if that product solves the idea for people. And when people start adopting it, the business is born, right? You can start with a simple website or a simple application out there. And a lot of times, they even jump in providing these services before they register it as a business. So most of the time, you see a company, quote and unquote, a project that is already out there in the market, but it's not yet a company, right? So that commercial side, most of the time FinTech will jumpstart the process, except for particularly, levels where they start with the whole business planning, business vision for the actual development of the product. More than 80% of the time, the product already goes out there before the guys but okay, we form a company and we need to register this agreement together, and those things start playing catch up. Right? So coming to the legal side, basically starting with forming of the agreement, which ties to the, I think some of the questions you asked earlier, how can lawyers serve FinTech industry? Coming on that legal side, these guys now have to form an agreement. Say, come together, we're trying to do something as founders of the company. Okay, we need to make it, in black and white. Most of the time, we see a lot of FinTechs where their founders have a lot of issues because a lot of things were not put in black and white. They were just verbal conversations, and they were more focused about solving the problem than actually doing the legal work. So when the company is now ruling, things are now taking shape. Frictions now come because a lot of things were not defined from the very beginning. And that is where the legal person jumps in to help streamline this thing. Start with formation agreement, founders agreement, what binds each other, how we're responsible for the different things of the company, what shareholding we have in the company. That agreement is what gives birth to when you register, when you now move to the actual business administration. And then of course, operational documents like terms and conditions, privacy policy, SLAs, intellectual property related operational things like trademark, patents, all the things that they need to operate as a company. It's also coming on the legal side where lawyers, services coming, of course, licenses when they get to the point when they need to acquire licenses and partnership with some strategic players. Most FinTech don't start with acquiring licenses, but especially in Nigeria, most of the licenses you need to run FinTech can't get to them directly. Start because you don't either have the financial muscle, neither do you have the level of network of which to be pulling these licenses. Most people start either without license or using what they call extended license. So working in the partner under whose license you're running or delivering services. So until the point where you're able to raise money or go after license. So those partnership agreements, guys that provide their license are all important part of that FinTech. Make sure that there is some form of legal protection that you have, even if not direct via partnership company that's giving you that level of coverage to provide services. Now, quickly to some of those questions around cryptocurrencies that were asked, and these are now for FinTech that are in that space. Some questions that were pretty interesting and see some very I would call it partial, interesting answers. One of them being that cryptocurrency, is it legal in Nigeria? A lot of people confuse something being cryptocurrency being legal or not and being legal tender. They are two different things, right? Cryptocurrency in Nigeria is not illegal. It's not an illegal, thing, right? The government has not, made cryptocurrency legal. What they've done is to make it not a legal tender, so you can't use it in financial transactions, right? But if you look at what people like SEC are doing, they're trying to bring up policies around cryptocurrencies being an asset, right? A security or an investment asset, and that is where a lot of people trade, do a lot of Bitcoin trading and all the rest, right? So SEC is now bringing a lot of things, whatever cryptocurrency you play now, try to put a little bit of regulation around that as an investment security or as an asset, but not as a tender, which CBN, quickly came into put place. So cryptocurrency is not illegal in the country, just that it's not legal tender. So a lot of people tend to confuse those things. Another one I'll quickly just touch on is future of FinTech in Nigeria. FinTech is coming mainstream. It's getting clearer. Every major company now is fairly in some financial space. It's either you're going to have FinTech arm or embed, tech into deliver product service. Even non-financial companies now are embedding financial services in their offerings now. And now even some of the regulators are saying NCC same time brought out a series of codes for regularly before you die, maybe MTN star 180 check something. Now they're unifying codes, but the truth is this whole code they're unifying are all products because they're not free, they're not toll free. There's some form of charge where you use these codes to actually access some of those things across whatever network you're using. So those things are products for the NCC as a regulator. So gradually, even the regulators are becoming quote unquote FinTech by bringing out products that are leveraging technology and they're making money off it. So almost everybody, the future is where almost every company in one way or the other will start having a FinTech play, in some form. Quickly, another one is about whether why is cryptocurrency easily facilitated in Western countries compared to Nigeria. Funny fact is this: as an official legal tender, yes, it's easily facilitated in some Western countries where it's allowed officially as a legal tender in a means of transaction. But as a trade asset, Nigeria is actually one of the biggest traders of cryptocurrency in the world, probably number 2 or 3. So it's not difficult to trade cryptocurrency in Nigeria. It's just difficult in transactional purposes because it's not a legal tender. So that's the irony of the Nigerian space, here. And lastly, I think you also touched around what lawyers. I think I spoke that before around the kind of lawyers. So generally, it's an interesting topic. You can't take law away from technology. You can't take law away from FinTech play, and increasingly, you can't take tech away now from law. Then legal things are going to. So it's a very interesting topic with lots of learning and definitely towards both learning from the team and also sharing our experiences. Thank you.
Thank you very much, Mr. George Onyewuchi, and our other mentors for the overview and introduction on the topic. I will be calling on our mentees to give their presentation now. We call the first presenter, the presenter 1. I hope you're ready. You can share your screen and start your presentation. Kindly note that you have 10 minutes. Who is the presenter, please?
I'm trying to share my screen.
Okay.
Good day, everyone. My name is Shanu Oluwakamiku, and I'll be presenting on the topic legal development of the financial technology in Nigeria. So our table of contents, we're going to be discussing the definition of financial technology, and then we're going to be discussing the acquisition of talents in FinTech companies, the talents needed by financial technology companies, and what financial technology companies should consider legally when hiring talent. So going to my presentation. In 2007, the CBN launched the payment. The CBN launched the payment system vision 2020 to achieve a cashless society. The FinTech revolution has led to mobile payment app, blockchain network, social media house payment options, as we see regularly today. Examples of these companies are Flutterwave, Stripe, Interswitch. Now, what is financial technology? Before I go into the definition of financial technology, I would like to give an overview of the financial technology industry in Nigeria. The financial technology industry in Nigeria has been growing. It has seen significant increase in growth year to year, year by year. It keeps on growing. It doesn't depreciate in its growth. If the banking and traditional financial service delivery has been totally transformed by this technology, by the technology we know as financial technology. So to define financial technology is a combination of the words financial and FinTech is a combination of the word financial and technology. It refers to the delivery of financial services through technology. It's as simple as that. And the services these FinTech companies include, the services they offer include financial literacy, wealth and assets management, borrowing and lending, fundraising services, and the likes. The largest FinTech company in Africa is Flutterwave, a Nigerian electronic payment startup. It said in February 2022 that it has raised over 250 million in its Series A funding, in its Series D funding series. And that's a valuation of over $3 billion. So this is to show that the financial technology industry in Nigeria would never stop growing and to continue to experience enormous growth in years to come. So let's look at the regulatory landscape of the FinTech industry. We know that the major regulators of FinTech in Nigeria are actually the CBN and the SEC, that is the Central Bank of Nigeria and the Securities and Exchange Commission. But then we have other sectors and other agencies that regulate FinTech in Nigeria. The Central Bank of Nigeria initiated the Financial Institution Act of 2020 in order to regulate FinTech in Nigeria, to help them to grow and to help them to reach more what's it called right now, more clients and more customers. Another regulator of the FinTech industry in Nigeria is the NDIC, that is the Nigerian Deposit Insurance Corporation. The NDIC is responsible for insuring all deposits liabilities of licensed bank and other
I think we lost our presenter. I think he's having network issues too. I will wait for him to join the call. Presenter 2 can start. Who is the presenter 2, please? Are you on the call?
Good afternoon, sir. I am presenter 2.
Okay.
Yes, but unfortunately, I'm unable to share my screen, but my friend will help me in sharing his own screen. So my friend would share the screen by putting up the PowerPoint presentation while I present.
Okay, you can start your presentation.
Okay. Please a moment, we'll just put it up.
I apologize for that. My network is pretty unstable here. Can you hear me?
Yeah, you can continue. I think you have 5 minutes more.
All right. And so these are the list of agencies that regulate FinTech in Nigeria. And then laws that regulates the FinTech industry in Nigeria includes CBN guidelines on mobile money services in Nigeria, bank and other financial institution act, cybercrime act, and a host of other laws. So what are the offerings of fintech companies in Nigeria? The most popular one is the digital banking. Digital banking. This is basically every single Nigerian has a digital bank on their phone, meaning that they are able to perform the tasks that they normally perform in a traditional bank, but they're able to perform it on their phone. And we've seen banks like, we've seen companies like Kuda provide these services. And then we have the alternative lending and digital credit service. Number of fintech companies in Nigeria offer direct credit and alternative lending platforms to Nigeria to make it easy and to make loans more accessible to Nigerians. Seeing, the recent social media controversy, PalmPay, offering loans to people. And then we have investment and financial management and crowdfunding services. These companies provide a crowdfunding services, and allows people to invest in the stock market just through their phone. And examples of companies are the Merit Trade and iInvest. Examples of crowdfunding companies are PiggyVest and the likes. Then we have artificial intelligence and machine learning offerings. So this would be companies that offer B2B services for other fintech companies to help them improve their products through AI and through artificial and through machine learning. So the types of fintech license, they have the alternative lending and digital credit licensing, which needs a 2.5 billion share capital. The digital crowdfunding intermediary license, which needs 100 million share capital. Now we have other subsets of licensing in the digital banking sector. The switching and processing license, which is 2 billion share capital, and a host of other licenses. So what are the talents needed by tech company? Obviously, the first and the most important is the technology itself. So fintech companies will need to hire people that can actually code and bring these services to the digital, and give it digital life, basically. So they need people who are into software development, who are into data analysis, artificial intelligence, blockchain and cryptocurrency, and cybersecurity. And these are the skills they need. So those kind of people would either have skills in JavaScript and the likes. So another talent the fintech company needs are regulatory knowledge. So apart from the tech people, they need to have employees who are well versed in regulation in the country that they are operating in. So for Nigeria, for instance, they should have employees who are able to know, okay, what are the things they can do or they can't do as regards the law in that particular area that they are operating in. For example, the digital banking system, they have to look at the laws that regulate that area. And they need financial expertise, obviously, because they are a financial technology company. So they need people with the background of accounting, financial planning, investment banking, and the likes. So they need customer focus personnel. So they need people that would actually be good in marketing so that they can sell their products to customers. And they need to identify the pain points and what exactly traditional banks are not offering that they feel like they can offer to people and people would need it and people would use it properly. And so what are the things fintech companies should consider while hiring their talents? So the first one is employee agreements. So the companies must create an agreement between their employees and be able to provide a conducive environment for both the employer and as well as the people that are coming to work in the fintech companies. And this will include compensation, benefits, their duties, and termination of the employment. So NDAs, non-disclosure agreements. Usually, tech companies would have NDAs because of things like trade secrets, because they don't want, maybe, for example, they fire a a software developer. They don't want a software developer to give their secrets up to like their competitors or their next employer. So compliance with labor laws. So a lot of Nigerians work they work online, they work virtually with foreign companies, and so the laws that guide that kind of transaction or that kind of relationship will include not only labor laws but immigration laws for remote workers. The protection of intellectual property in fintech companies. So fintech companies should have a policy and agreement in place to protect their intellectual property, such as patents, trademark, copyright. So fintech companies should also ensure that the new hires do not bring any, any intellectual property from maybe their previous employers. And even when they go on to other companies, they should not take their intellectual property to that other company. And employee background check. So they have to just wait. Fintech companies do know your customer check on their potential customers. Employers too will do background check on the people they want to hire. So data protection and privacy. So fintech companies must comply with the Nigerian Data Protection Regulation, which regulates the processing of personal data in Nigeria. So the regulation sets out requirements for obtaining the consent, collecting and processing data, not just even the customers now, also the employees. And so I've already discussed cross-border agreements as for people that are working remotely. And also, one that has not been included here is taxation. So the fintech companies must register with the Federal Inland Revenue Service and obtain a tax identification number so that the employees will be able to conduct and remit income taxes for their employees and even for the company as well. So to conclude, it is fair to say that the fintech industry is going nowhere, and the laws that are already put in place have actually been the reason why we've seen a fast growth in fintech in Nigeria. And our recommendation is for the policymakers to develop more and good laws to help this company to grow even bigger and better, and to serve the populace and to provide solutions to financial issues that many Nigerians are facing. Thank you.
Thank you very much for that wonderful presentation, Olua Kamikun.
Thank you, sir.
We will take the presentation for the second presenter now. You can start now.
Okay, thank you. Good afternoon, everyone. My name is Kitrin Oyeko, and I'll be presenting on topic 2, which is commercial development of technology. Okay, so I'll start with the content here, definition of terms, introduction, open banking, embedded finance, and the world of payment. Please swipe. Okay, so basically, technology is the application of scientific knowledge for practical purposes, especially in industry. So basically, when we talk about fintech, I think for traditional banks, that's before the advent of fintech, and I think that actually brought about fintech basically was the 2007-2008 financial crisis. So basically, traditional banks have most times the reason why customers or why we use traditional or conventional banks is basically to store value for money movement and access to credit. So when they could no longer provide this service, yes, while the traditional bank could no longer provide this service because of the oil crash, so they lost customers. So customers lost their value in them, like they lost their trust in their banks. So basically, I feel that's one of the reasons that brought about the advent of fintech. Please swipe. So like I said earlier, FinTech addresses the basic needs of man and not just the lofty transformations in FinTech. Okay, factors of commercial development of FinTech. Number one is the innovation. It brings about innovation, ideas, technology, creativity. Then it brings about investment. So investment is one of the major domains or a very big domain of FinTech industry and also in Nigeria. So when you talk about investment, you talk about wealth tech, you talk about wealth tech, you talk about investment technology. A very good example of this is Bamboo, where they can get investment securities, where they can purchase cryptocurrencies, either invest in foreign stocks and a lot of it. Then when you talk about regulations, that's where the law comes in. That's where the legal part, regulations that has to be in place, and the adoption. So how people really, yes, the adoption of that FinTech. Please swipe. Yeah, so open banking. Open banking basically means allowing third-party payment service and other financial service providers to access banking transactions and other data from banks and financial institutions. What this practically means is that, yes, what it practically means is that you as the customer, they have your consent, they have your permission to share your data with other banks. And the way open banking operates in Nigeria, it uses the API, which is Application Programming Interface. So the way it operates in Nigeria, of course, it is regulated by CBN too. It is regulated by CBN. So the way it operates in Nigeria is, okay, we have the CBN, we have API provider. API provider stands as a traditional bank. Then we have API consumer. Please swipe. Then we have API consumer. API consumer stands as a FinTech brand. Then we have the customer. So a very good example of open banking is PiggyVest. When PiggyVest launched, then you could actually tell them that, okay, probably every day you can remove 200 naira or 500 naira from my account. So they just, because they have that data already, they have access to your information. So of course, you give them that consent already. So they just deduct your money every day. A very good example is, yes, CBN, then API provider, traditional bank, for instance, you use Wema Bank. So they remove from it. Then the API consumer, which is the FinTech, that's PiggyVest, then they remove from it. Then you are the consumer, that's the customer, because they have your consent or your approval to it. Please swipe. Yeah, so open banking, data held through the use of open banking will be secured by the OBR, which is Open Banking Registry, which will be overseen by the CBN. So data protection also has a whole lot of things to do in this, because you have access to your customers' data. It also has to be protected. You cannot just use their data without their consent. Please swipe. Yeah, so parties in open banking system, the Central Bank of Nigeria, I explained earlier, the API providers, that's your traditional banks, the API consumers, that's the FinTech, and the customers itself, that's you that you are giving them your access. Please swipe. Yeah, so early backers of open banking in Nigeria includes, but not limited to, Sterling Bank, KPMG, PwC. Then the coalition now expanded to include the likes of Mono, InterSwitch, LensSquare, Pampe. Yeah, and I would also like to add that a lot of telecommunications industry are also going into the FinTech space. For example, MTN with Momo Pay. Please swipe. So potential areas for open banking in Nigeria, it helps with payment solutions, personal financial management tools, lending platforms. They can easily get access to loans, investment platforms. They can easily invest. Yeah, they can invest easily. Another example of this is on Kuda. Yeah, on Kuda, you can buy stocks. You can buy stocks from Bamboo. So aggregator services, business-to-business solutions, estate management, and the likes. Please swipe. Yeah, so benefits of open banking, centralized network, access to more personalized financial product and services. So you get access to a whole lot of things. Imagine you open your Kuda account and you can invest, you can see a lot of stocks. Maybe you want to invest in Apple stocks, the big banks, a lot. You can, so you get access to a lot of information. Then improved trust for traditional commercial banks. Yes, because as customers, you tend to trust your bank more. Please swipe. Then embedded financing. Basically, what embedded financing practically means is integration of financial services into non-financial goods or platforms, such as e-commerce, websites, mobile apps. And luckily enough, many Nigerian companies are adopting into these services. For instance, OnePipe, Clump, etc. While banks like Fidelity Banks are also engaging in it. Please swipe. So the Central Bank of Nigeria also released operational guidelines for open banking in the country. Okay, yeah, this is also about embedded financing and how customers, even business owners, SMEs can also have access to it, also have access to financing, and also increase credit access for businesses. It helps increases credit score too. Please swipe. So areas for commercial development of embedded finance in Nigeria: e-commerce, ride-hailing and food delivery apps. When you can easy access to buy food, probably Jumia, Chicken Republic, and a lot. Then social media platforms, education and healthcare platforms, small and medium-sized enterprises, SMEs platform, like I said earlier. Please swipe. Now, other areas of embedded finance in Nigeria: buy now, pay later. Buy now, pay later is a very, it's a very, I think it's a, it's a good area that is really, really thriving. Yes, it's an area that is really thriving in Nigeria. Imagine you can buy phones and you can buy gadgets, you can have access to properties, access to things, and you can pay later. So FinTech has also brought that for conveniency for customers. Then point of sale lending, where you can POS service, you can go out, you buy stuff, you can pay with their POS. Please swipe. Yeah, the world of payments. So it's basically a system by which merchants and companies across the world send and receive payments in different countries. The world of payments, FinTech has really helped evolve the world of payments. It has changed the narrative. Yes, it has changed the narrative that you can access payments, you can get things even while you're not in Nigeria. Please swipe. So areas of commercial development in the world of payments in Nigeria: mobile money, that's Paga, QuickTeller, OP, peer-to-peer payments, for instance, Flutterwave, Paystack, e-commerce, Jumia, Konga, where you can buy stuff. Then point of sale, that's POS payment services, InterSwitch, First Banks, First Money. Please swipe. Okay, then the government payment systems too. Please swipe. Then cryptocurrency. Yes, please swipe. I don't know if that's the last slide. Is it? Okay, yes, then area of commercial development in the world of payments in Nigeria. That's the government payment system, like I said earlier, Remita, the Nigerian Electronic Fund Forum. Then the regulatory reforms, that's the introduction of Nigerian Instant Payment Systems, NIPS, and implementation of bank verification number, that's BVN system for customer identification. Please swipe. So in conclusion, FinTech, embedded finance, open banking, and technology facilitated payments in Nigeria have experienced significant commercial developments, which are driven by several factors and circumstances. So apparently, FinTech is here to stay, and it has helped yes, it has helped with swift payment and has brought finance to the grassroots. Thank you.
Thank you very much, Catherine Onyeka, for that comprehensive and educative presentation. I'll call on our mentors to give us some comments on it before we jump to our question and answer session. And I'll call on Mr. Senator to comment on the coach presentation.
Thank you very much. Wonderful presentations by my younger colleagues here, or future young colleagues. That was very good. I'll start with the first one, the legal development of FinTech. Well presented. I see that you understand the regulatory and policy frameworks around the legal development of FinTech. Apart from that, you also looked at possible legal protection mechanisms that players in the FinTech space can leverage to ensure that they are minimizing their risk. You also talked about compliance, and that's pretty good. Two observations that I have. One, now I'm not sure if I'm totally correct, but I think I should bring it to you guys' notice. I also noticed this in the second presentation. There seems to be an assumption that FinTech is only limited to guys like Flutterwave, TNAP, Paystack, and the rest of them. I would like to point out, for the purpose of those who may not know, FinTech also involves even your traditional, players in the financial service industry, including banks, capital market players. They involve them as long as they also have launched or introduced the products that help them enhance the services they provide to customers, the financial services they provide. So when we give examples of FinTech, I see that all of the examples from this side were always about the Flutterwaves and the Paystacks. I would like to point out that there are many FinTech products by even the likes of First Bank, Sterling, Access, and the rest of them. I know that some of us already understand this, but I thought I should point it out because I noticed from the presentation by the first and later by the second that there seemed to be that assumption that it has to be a non-traditional player. And secondly, this is under recommendations. I hear you very loudly when you recommended that regulators should try to introduce regulation or policies that help the industry grow, the FinTech industry grow. I agree with you absolutely. I would have expected that your recommendations would be a bit more specific because this is what everyone wants to achieve. I can assure you, even the strictest of regulators also want to achieve this, but the issue is usually around how and to what extent, you understand? So in your recommendations, try to be a little more specific, so that your recommendations can be much more helpful. For example, you talk about, you could come down to one of the issues. For instance, I see that there are many questions around cryptocurrency, whether it's legal or not legal and all that. I would have expected a recommendation on maybe cryptocurrencies, on how the government can go about it, and not just generally states that government should support fintechs, right? So that's just my observation. So well done. The second presentation, right, on commercial development of fintech. fantastic work as well. I see you've done fine research to see the various models or business models in the fintech space, from all the types of payment services and lending and online banking, embedded services, and the rest of them. Well done. It tells us that you are following developments in the industry. Having said that, you did say something at the beginning of your presentation, which, presentations will never be perfect, but I thought I should mention it so that you can improve on that aspect. There was this assertion you made that fintech addresses the basic needs of man, to quote you, not just the lofty transformation of fintech. I'm not so sure what that means, but it will be a sweeping statement to assume that fintech only addresses the basic needs of man. Fintech addresses even some of the things that certain persons in society consider needless, unnecessary. Some people say that the solutions some fintech players build today are not market fits. What does that mean? It means that the market is not even ready for those solutions. It's something that could work in 2050, not 2023. So just by way of improvement, you could just edit your introduction so that you don't have that generalization which could take points of your work. Having said that, I just to go back to what I was saying earlier, there was a part when you were talking about APIs and you mentioned WEMA and all that. It appears to also be that there's an assumption that the fintech players must be the likes of Flutterwave. It may not always be that. Today, there are fintech players who also use APIs by Flutterwave, for instance. Just the same way if you use services by banks like Sterling Bank. In fact, all of the banks in Nigeria, they all now have their own various services as well, fintech services. I'll quickly go to the next one, so I'll round up. I would love to commend your highlights or your mention of telecom operators, also now playing in the fintech space. That's a very good one. I haven't, before you mentioned this, I have not, come across one who had mentioned that telecom operators are now also playing in the fintech space. And indeed, the CBN has a license now for payment service providers, PSPs. And I'm aware that MTN, Nine Mobile, the other one, I usually forget that a lot because they've changed over time. The one that took over from V-Mobile, right? They all now have payment service solutions in the country. So it was a good point. I just thought I should mention that. Well done. In terms of open banking, you said something about open banking improving trust. I agree with you, right? But I thought that I should also mention that it's not absolute. What do I mean? There are experiences we have had, that have, as a matter of fact, hurt trust in that space. It brought some level of distrust. I'll give you a very recent, example of that. In Nigeria recently, that was sometime last year, the deposit money banks like WEMA, First Bank, and the rest of them believed that fintech or most fintech players were beginning to abuse the biometric verification infrastructure, that's BVN. And a lot of the fintechs were abusing BVN. Therefore, it was time to stop these fintech service providers, all these Flutterwaves and the rest of them particularly, from using BVN for the purpose of verifying their customers. Now that caused a lot of crisis within the time it lasted, because why were they doing this? Because they were seeing that people were beginning to lose trust in the BVN infrastructure, because certain persons who say they are fintechs are abusing it. So you see that experience doesn't illustrate that, opening things up for others to also come in necessarily helps to improve trust. It can actually lead to a great level of distrust if not well managed. And this is also one of the fears of banks and other traditional and centralized institutions. They feel that open banking will decentralize their services. What does decentralize mean? You are now relying on many, many players to use your infrastructure to improve services for customers. That comes with a lot of risk, because if you don't have all the legal frameworks and protections that the earlier presenter talked about, you might get into trouble. You have to start focusing on third-party contracts. If you're allowing a Flutter Wave use your API as a bank, how are you able to ensure that Flutter Wave, for instance, has all the third-party contracts, has all the data protection and privacy policies, all that in place, security infrastructure as well, to ensure that they don't put your customers at risk or other customers at risk. So these are things you might need to also consider. Lastly, from me, you talked about areas of commercial developments. Fantastic one. You mentioned Remita, TSA, BVN, and the rest of them. I just wanted to mention that you should not forget e-Naira by the Central Bank of Nigeria, which has now also made the central bank a fintech player. And having identified that, I go back to the first speaker. Maybe you guys will now have to put it through a debate, because where we are going to right now is that we are seeing persons or institutions who are expected to be regulators also now turning to players themselves. For instance, a good example is the Central Bank of Nigeria, which is supposed to regulate financial services and industry providers. Now, by virtue of introducing the e-Naira, the central bank is also now a fintech player. The question is, who regulates the central bank? Thank you.
Thank you very much, Mr. Senator, for that clarification and correction and addition and contribution to the both presentation. So I will call on Ms. Nowazi to also give her comments on the topic. Okay, I think Ms. Nowazi is not on the call at the moment. So Mr. George, I'm calling on Mr. George to comment on the both presentation. Mr. George, can you hear me, please?
Yeah, sorry. My network. Presentation. Yeah, but from what I saw, presentation, team did quite a good job. First of all, it's you're already a winner when you participate, right? Part of the key thing is acquiring knowledge was there. And what I saw, especially from the second presentation that I saw, guys are quite capturing some of the things around FinTech development. One of the few things I probably would just add that I saw is around, I think I heard how many times I came Senator mentioned something about having situating the recommendations of our internal reality, especially as it benefits the legal fold. Everybody on this cohort are all lawyers, right? Like I say, it's everybody are all like either studying law or legal field here, right? Or is there
I don't think it's everybody though.
Oh,
Some
okay.
are in the finance sector.
Oh, right. That's not a side of things. So, but trying to get how to practicalize or how does this various development, these various things that you said, banking, electronic banking, the laws talked about various kinds of fintech around banking in Nigeria. So mentioned embedded finance. How do all this relate to what we are doing? How do all this relate to, both development of the tech industry today and probably to take up position, legal practice, right? How can you marry the handshake? Because at the end of the day, like some of us already here, I'm a very big fan of you enterprises, right? You enterprises meaning, right? While you're generalizing knowledge, how do you personalize knowledge to benefit you or to help you achieve a particular goal? So I typically always like when you do the generalized knowledge part, bring it home. How does it relate? How does it relate to the cohort of here what you're trying to do? So that really help make it come home. So in our future presentation, try to relate this macro, knowledge that we share, relate and bring it down to, how it makes some form of sense, some form of reality to our own, either our current practice or what we hope to do in the future for some of us that are still students. So how does it relate to the student of law, for example? How does it relate to what we hope to do our studies? Yeah, but generally, it's very session on understanding the general knowledge base around some key parts of fintech industry, especially as it relates to banking, as it relates to embedded finance. Or with open banking, embedded finance comes a major issue around data privacy. But that is data security and data privacy is at the center, of what can make or mar banking embedded finance. And that is also something that relates to what you're doing, especially in the legal practice, in IP and all that, right? Because the open banking, you're practically saying that I want to up my data, my information, so that any other third party beyond my bank can have access to my financial information. And that gives people using your financial information different kind of things that you might not even have before, right? And so that data privacy and protection is critical to what can make or mark on banking. That is some of the areas that you play or you can function, especially with regards to fintechs, right? How you can make sure that the data privacy setup, what they're doing as around data privacy, data security is critically, is well enshrined. Something happened just less than 4 hours ago for some of us in the industry, where especially when it comes to virtual card services, where some of the card scheme, MasterCard and Visa, temporary order of virtual card, virtual USD card services. Guys attached to them because of a lot of anti-modern money laundering and policies that were not in place in some of these companies, some of these fintechs that are issuing virtual USD cards. The anti-money laundering policies are not tight. Their counter-terrorism policies are not tight. The data privacy policies are not tight, right? So because of that, they have to deactivate the entire service for most of people. Some of the big guys in Nigeria were all deactivated. So that data privacy part is critical to anything you want to do as long as it relates to the banks, right? And that's something that I would have really loved to see come out. And that relates a lot to what you hear at JIIPCC. So that is a critical that but overall, it's also a very high session to learn the realities of some of the things happening in the industry. On the legal, on the first presentation, I think network was helpful sometimes. Like I couldn't catch it as much as I did. But from little that I saw, I also saw that we tried to do a lot of background information around the regulatory parts of that whole industry, try to figure out the various regulators and how each of these regulators come in, what they kind of get as some of their history of those regulators. So it was a very also a very important for me to so regulatory is a major part of industry, and it is what keeps the industry in shape. It's not fintech players are probably gone a whole. If you leave them to run 1,000 miles before they even wear their shoes. So the regulatory industry is improving and tries to keep them, check, right? But as a legal entity, yes, you mentioned, I think I came in towards your last slide when you mentioned something about data protection, privacy, but when you are considering about hiring talent, right? But that is just on talent, hiring talent. But how about entity itself? And talking about talent, talent is at the center of what makes fintech strive, right? So the process around how they hire talent is also critical to how that fintech either survive, whether you hire or whether how he hires and how he fires are also very critical to that fintech play. So if you wanted to talk about talent, also you can also introduce how critical it is for those policies around talent to also very clear. Because of those you play as a legal person, in the legal space, for example, so that those play, for the fintech on talent. Because talent, the whole lot happens around talent that industry. Very observant. Over the last 1 year plus, the global fintech space has been very strong. Of fire, right? Different entities are letting us know the people. But this, firing is not as easy. There's so many things involved. There's so many severance packages in terms of firing these guys, because these guys have the intellectual properties. These guys have the codes that they are working on. So you fire them. So how to disengage is also critical. It's not like a regular business, so you just wake up one day and then you just disengage. You have to make sure that you as a company well secured and well protected so that you don't disengage and that leads to the company going down. Head sometimes when you hear one particular financial institution's network has issues because some particular group of guys network team have left. So that will tell you the effect when people disengage without a particular process. That could easily crash the system. So talk about talent. It's also important to talk about how that legal process around managing talent, hiring, firewalls. They are critical to that whole fintech evolution, right? But by and large, some very, very important points will also be in situation and also so well done to the teams. I'm sure as we move on, definitely then to add how the application is for congratulations, guys. Yeah, thank you.
Thank you very much, sir. So I'm thinking that Hussein might be having technical issues, and I don't know if Amina is here. Thank you so much, Mr. Senator, Mr. George, and Nowazi, and for all the mentees that have presented also. We are very grateful. So I think it's time for questions and answers. So if you have a question, please just raise up your hand so that we can see you and we'll call you to ask your questions. Do we have anyone who has a live question? We have experts that are here, so this is the time to take advantage of this. Please, Amina, if you are online, kindly unmute yourself and take over the moderation. Thank you.
Okay,
Yes.
ma'am.
Thank you.
I'm here, ma'am. Please, if anybody has questions, you can ask now, or I can proceed with the ones we already have. Can you hear me?
Yes, we can.
Okay, I'll start with the first one. Okay, let me start with number 4. I pasted the questions on the chat room so everyone can view them. Number 4 says, why is cryptocurrency easily facilitated in Western countries compared to Nigeria? I'll be directing this question to Mr. Senator, please. Mr. Senator.
All right, thank you. Interesting question. First of all, when you understand that cryptocurrencies are decentralized form of money, meaning that they are not issued or created by any central bank in the world, they are created by private entities. You find that there will be a problem because money, the idea or concept of money has always been something that is from the states. You know, whoever controls how money is created and issued will eventually have so much economic and political power. That's why we have to understand the context, you know, so that we understand what is really the issues with regulation of cryptocurrencies. Now, having said that, it is, well, generally you could state that cryptocurrency is more facilitated in Western countries compared to Nigeria. But again, it depends on what we mean by facilitation. If by facilitation we mean providing the enabling environments, including the platform upon which cryptocurrency transactions will be taking place, I can tell you that there is no much that governments across the world have done in that respect. What has basically happened is that regulators largely decided to stay back and watch where this innovation is going before they would come in. Since the first cryptocurrency, the Bitcoin, was created and introduced back in 2008, regulators did not really concern themselves with the need to facilitate or not facilitate. They just allowed innovators to continue to innovate and see where this goes. After over 10 years of Bitcoin and other cryptocurrencies, in certain jurisdictions, right, they have decided that this is more risky than beneficial. Therefore, we will not allow anyone facilitate it. An example are those countries, including China, right, including Nigeria, including certain other countries that have said, we will not allow banks and other players in the financial industry facilitate cryptocurrency-related transactions. While others have not expressly come out that way, especially in the Western part of the world. In the Western part of the world, we know that when it comes to the rule of law, fundamental rights, these things are much more respected. You know, unlike developing countries like Nigeria, where anyone could do anything and basically get away with it. So in the Western world, the US, for instance, did not say the way the CBN has said. They never came out to stop any bank from facilitating crypto-related transactions. Basically, what they did was to advise banks. They advised that we think that there are risks associated with cryptocurrencies, such as money laundering, terrorism financing, fraud, investment scams. Therefore, if you must provide services or facilitate cryptocurrency transactions, ensure that you conduct your AML, that's anti-money laundering, process, so that you ensure if there is any investigation for suspicious transactions, you'll be able to provide the KYCs of the players on your platform. It's as simple as that. So this is unlike Nigeria that actually stepped out and stopped all the banks and other financial institutions from carrying out or facilitating cryptocurrency transactions, and even went all the way to fine a number of banks. I mean, Access Bank, mention them. They've all been fined up to over $1 million, since that 2021 February 5 cryptocurrency directory. So it's all a matter of approach, actually. It's a matter of approach, which is why some people will wonder, is cryptocurrency legal or not legal in Nigeria? I'll say it's point blank, and I think Mr. George already pointed it out. Crypto is not illegal in Nigeria. Even the Central Bank of Nigeria has stepped out to say that we never said crypto is illegal in Nigeria. We only are concerned about the risk to Nigeria's banking and financial system. And just so we know, especially for the lawyers and to-be lawyers in the house, there's already a federal high court decision, the case of governor of the Central Bank of Nigeria and Rise Vest Technologies, where Justice Taiwo held in the Federal High Court, the Abuja Division, back in October 2021, that the Central Bank of Nigeria does not have the statutory authority to illegalize or criminalize cryptocurrency trading by way of a mere circular. That circular of 5 February 2021 is null and void, and it is against the constitution of the country. That circular that people now say illegalize cryptocurrency in Nigeria has already been thrown into the waste bin by the Federal High Court. The question now is, why are banks still respecting a circular that has been thrown away since October 2021? It brings me back to the difference between developing nations and developed nations. The rule of law is still an issue in Nigeria. When people don't respect the rule of law, you will think that lawlessness and executive and rascality is law. It's not law. So as I speak to you today, that circular is already illegal, and I'm not aware, at least to the best of my knowledge, that that decision has been appealed. So there's no illegality as far as cryptocurrencies are concerned. And as a matter of fact, there's a Money Laundering Act 2022 that has recognized virtual assets and said that players in that space are now financial institutions, which must also now comply with Nigeria's anti-money laundering laws and other regulations. So That's that's my shortest answer to that question that looks less. Thank you.
Thank you so much, sir, for that clarification. Looks like we have a question from Mr. Ann. Kindly go ahead with your question, Mr. Ann.
Okay, thank you very much. Good evening, everyone, and I would like to thank the mentors. Sorry, can anyone hear me?
Yes, we can hear you. Go ahead, please.
Okay, thank you. So I'd like to thank the mentors again for the enlightenment and the clarification so far. So my question, or I won't say it's a question, but then I would need more clarification on what Mr. Senator said about in-era being okay, about in-era. I said the CBN is now becoming a facilitator, just like some FinTech players, because I want to believe that the in-era is just a virtual currency, and according to the CBN Act, they have the power and the statutory right to issue out any legal tender. So in my opinion, or in my view, I think in-era is just a virtual currency, even though it is built on blockchain, just like some cryptocurrencies. But then the clarification I need is on the fact that how is CBN facilitating or becoming a FinTech player by issuing out in-era? Because I think it is just like the normal naira we spend, but then it is a virtual one. So I would like to get a clarification on that part. Thank you very much.
That's a very fantastic question, very intelligent one as well. Now, you're right when you say that in-era is as good as, I mean, the legal tenders as well. There's no difference. It's just that one is digital and the naira we are used to is not the digital one. It is either electronic or physical. How is this different? I'll tell you this. So, since you've been dealing with naira, the legal tender that you know before in-era came up, since you've been dealing with it, have you ever had reasons to go to the Central Bank of Nigeria to carry out a transaction? Have you ever had to go to CBN websites to get access to your naira? I guess the answer is no. The CBN does not deal with guys like us all. It doesn't, because it's the Central Bank of Nigeria. It is the banks that CBN regulates and license, like the First Banks and the rest of them, that we all deal with. Because we deal with these guys, we have to download their app and all of that. Now, until the in-era was introduced by the CBN, has the CBN ever asked you to download their app? Now, the CBN has spent billions of naira creating the in-era products. They are spending a lot more marketing the in-era products to you. For the first time in the history of the central bank, the CBN is marketing its own products, asking you download this. And when people downloaded and the app crashed, the CBN, like any FinTech player or provider, came up to explain, we are sorry, we'll improve it, and they did improve it. Now the CBN is marketing the in-era all over again, asking banks, financial institutions, all these guys to come on board. I even watched many times, the CBN marketing the in-era to market women, to come on board, to all these guys you call embedded saving finance providers to come on board. So Mustan, if you pay close attention, you find that this is not like the normal CBN naira we are talking about, because you know why that is. It is the CBN that is directly responsible for the e-naira. It's the CBN. If it ever fails, it is the CBN. Before now, you deal with your banks. So that's the difference. And it makes the CBN a service provider. Have you read the, what's it called, the framework of the in-era? How the cybersecurity issues will be run, how you can create create an in-era platform and integrate it to yours, all that stuff. That's as good as launching a product. So the in-era itself is as good as legal tender as we know it. But the platform upon which it will be provided to you is launched by the CBN. And that makes CBN a service provider. Now, why that is a question, especially in Nigeria and other developing countries that do not have financial conduct regulators. If you go to South Africa, where one of our co-speakers is from, and to which she is affiliated, you notice that she doesn't work with the Reserve Bank of South Africa as a regulator. She works with a financial service conduct agency or so. We don't have that in Nigeria because when the CBN was created, it was created contemplating that the CBN will be the regulator of all financial conduct in the entire banking and financial services space. So the challenge I'm throwing out to you guys, because this is your own Nigeria now, it might be that it is now time for Nigeria to start considering the need to have a regulator of financial conducts separated from the Central Bank of Nigeria, as we have it in places like South Africa, as we have it in places like even the US. The Reserve Bank of the US does not play the regulatory role that the Central Bank of Nigeria plays. The same way the Reserve Bank of South Africa does not play the regulatory roles that the Central Bank of Nigeria plays. You must now start thinking about a financial conduct regulator. That's the point. I hope this helps, Mr.
Yes, sir, it does. Thank you very much, sir. Yeah, thank you.
Yeah, and let me just
Okay.
very spot on, but let me just take it. I think I was mentioning something earlier when I was giving a remark about how our regulators are gradually becoming product-led entities. I think there was the SEC, I was right that example. Yeah, notification coach. And then somebody asked after CEO. And what Senator just said is spot on. When you have a regulator that maybe because of the reality of the environment today, it's taking it upon themselves to jumpstart a lot of things, right? So naturally, they're drawn into also becoming a player, not just just one of those things. There are a lot of things CBN does as a player, right? CBN plays the banking industry through NISAL. It owns NISAL Microfinance Bank, which does some last mile banking interventions, right? He owns the National Registry Commission, National Collateral Registry, where he helps facilitate using digital assets. It's also interested in playing card schemes. If you follow them closely, you see that they're bringing out their own cards, their own debit cards, right? So, when the regulator is one trying to, bring out his own debit card, just we have that's with Verve, MasterCard, and Visa, they want to bring out their own card scheme. So, for whatever reason it is, or for whatever peculiarities that they give, we have a situation whereby they feel the responsibility to jumpstart a lot of things, and naturally lead you into playing, being a player in the industry and not just a regulator. All right, so and gradually at some point there starts to become conflict of interest, maybe. There's a very thin line you start playing. Yeah, so the way forward, like I said, some of these things have to be separated, but it is what it is at the moment. And fortunately, or unfortunately, depending on part of the provide wow, that is CBN. Yeah, but it's not just CBN. Almost all the regulators now are fast becoming products players in their own, various ways and their own various ways. It's an interesting, it's an interesting thing to see. Everybody wants to declare revenue. It's only in Nigeria where you hear regulators are declaring revenue. At the end of the day, they're declaring profit, they're declaring revenue from activities, and that is where we find ourselves.
Thank you so much, sir. The question I'm going to, the number 3 question will be directed at you. I think they are in the same vein, but let me read it out. Laws and guidelines regulating fintechs in Nigeria are forever changing. Wouldn't this cause hardships for fintechs? What can be done to minimize the frequent changes in the laws? Thank you, sir.
Would it cause hardship? That's naturally. Businesses can deal with almost anything, right? There's one thing the business is strong, and that is one of the major considerations when a foreign company either comes into Nigeria or leaves Nigeria. Can deal with every other problem you have, whether it's electricity or whether it's inflation, name it, they can deal with it. But one thing they can't deal with is an unstable regulatory environment. Because people or businesses plan in accordance with the policies. And some of those planning sometimes are medium-term based. They're not things that easily just pick up and just shake. But those things take time to set up. So when they are frequently changing and they can't predict based on the fact that they know that if you set up these things this way, we can predict what 1 year, 2 years, 3 years revenue will be. But when the policy change can crash everything that you have done. Right? One day somebody woke up and changed the policy, and out of thin air, Okada went as a business. Okada had over $50 million invested in it, went as a business. All the other ride hailers all vanished into thin air as businesses. All the people that they employ at investments and all that. Right? So it is difficult to deal with, but they don't have a choice. FinTech don't have a choice. It's a cat and mouse game, right? And that is why you see a lot of big FinTechs now. There's a goal. You keep seeing them appointing people as they call it different things. I would say it's a government liaison director. So I would say it's but they appoint people that their job is to continuously engage the government, so that when the policy change is coming, they can smell it very quick. So they have like insight into potential change that is coming before it actually comes. So it's one of the ways that the fintechs, especially the more established ones, are mitigating it, right? You have to have someone whose job is basically snooping around and shaking with government officials, especially offices that have business with you, especially the offices that regulate you as fintech. You have to have someone who is on check, then your liaison officer, so that when the policy is coming, before it comes public, the guy already has a feeler of it, and then you guys start preparing yourself as quick as possible before it comes. So that is one of the ways that the guys are dealing with it. Other than that, I mean, you just have to what you have to survive when it comes. And that's just the environment I find myself.
Thank you so much. I'd just like to add to that, right? Perhaps another angle to this. This is where we need to now distinguish between laws, like laws made by the National Assembly or the legislators, in the country, and guidelines or regulatory frameworks issued by regulators like the CBN, the NCC, and the rest of them. Because if you ask me, and I think you can also check this, laws in Nigeria on fintech they almost do not exist. If they do, they never change, right? The laws we call FinTech laws are the general laws we already have, like the Money Laundering Act, the Central Bank of Nigeria law, all of that. It was recently that BOFIA changed, the Banks and Other Financial Institutions Act, changed, yes, but the major ones are still there. What continues to change more rapidly are those subsidiary legislation from the Central Bank of Nigeria, from the Securities and Exchange Commission, from the NCC, and the reason why subsidiary legislations are there in the first place is to ensure that policy can respond to changes in the society without having to go through the long and tortuous journey, or process of making laws through the National Assembly or State of Assembly, as the case may be. So there are, of course, going to be both advantages and disadvantages to this. The advantages will be much more there when you have regulators who don't carry industry players along. That's where you're going to be having problems. In jurisdictions where industry players are carried along by regulators, this is actually very good because they will be able to respond to changes in the industry better than having to go back to the National Assembly or the legislature. But if you have a regulator that does not take industry players along, what you might have most likely is that they will violate a lot of things. And industry players will be unable to talk much because if you talk too much, your license could be revoked or taken from you. You don't want to look bad to your regulator. In the course of serving as the president of the Stakeholders in Blockchain Technology Association of Nigeria, CBAN, we had these issues where we felt that the Central Bank of Nigeria, for instance, was not taking industry stakeholders along, as far as its position on cryptocurrencies and all that were concerned. And it's usually very fast for these regulators to respond if they want to. For instance, the Securities and Exchange Commission did not have to go back to the National Assembly to ask for more powers to be able to regulate cryptocurrencies as digital assets in Nigeria. It just relied on the Investment and Securities Act of 2007 and then made the regulations. It issued regulations in May 2022, which brought crypto assets, digital assets under its purview, as long as you use it for investments and securities purposes. So that is also good because I remember that the SEC, as far back as 2018, we were all seated on the round table discussing cryptocurrencies, how we need to respond, and they kept issuing statements. As far back as 2020, they issued a statement that they will come up with regulation. In 2022, that regulation was ready. So I think compared to the central bank, the SEC does a better job in terms of carrying industry players along. The CBN, of course, understandably, they play an even more sensitive role, and they are more like the father in that place. Any other regulator in the financial services sector is like the wife of the CBN, so to speak. So I think that that's what we should pay attention to more mainly. The changes, the frequent changes are usually coming by way of subsidiary legislation by regulators, which is why we need to also keep engaging, right? And I also, assuming the industry players were here, what I would suggest to industry players, right, is that they too need to strengthen their associations. Nigeria is a place where rule of law is not respected. So if you don't have associations that are influential, you won't be able to rub hands or speak to the government. I have had experience where certain financial institutions believe that they should be able to speak more and engage more with the CBN, but they can't even do so because if they try any nonsense, you do anyhow, you see anyhow. So they rely on associations like CBAN, what's the other one called? There's this one for mobile payments, mobile service providers in Nigeria. They rely on those associations to push, right? And that's where I also see, you see this lending issue. You must have heard about digital lending and all the problems it caused as far as data protection and privacy violation is concerned. NITDA took it up. FCC, PC took it up as well. EFCC. The issue there was that there was no existing framework under the CBN purview that will regulate all these digital money lenders. And we suggested during one of these CBN calls that we needed, rounding off now, we needed to do something about that. And FCCPC decided to bring an interim, regulatory framework just for digital apps for now, lending apps, while we see whether states, because lending comes under state regulation. So while we see whether the states will come up, or we can convince the National Assembly to also make lending a concurrent matter, so that we can have a federal law or regulatory framework for lending services. So we don't have 36 lending laws to deal with. That would be too much. That is already the problem in the US, where people prefer to go to Bahamas or to Nigeria to run rather than stay in the US. Because if you stay in the US, you have to respect not less than 56 laws in that area. And compliance and all that licensing is very expensive. It's very expensive. So Nigeria should be more of one market than being fragmented. That is if states agree.
Thank you very much, sir. Looks like the 2 hours allotted to the session is too small for what we need to discuss. Thank you very much, sir, for that. I believe the rest of the questions have already been addressed by our mentors at various points in their presentations. So I don't think there's a need to go back to them.
Question, please.
Okay, please go ahead.
Okay, thank you very much for the insightful sessions, sirs. Please kindly refer us to resources for further studies. Maybe that you think that we should be able to get more knowledge. Thank you, sirs.
Mercy, right? Okay. I mean, just let you recall or remember our days in school, where we are always like resources for that stuff, right? But the truth is, the world is now in your palms, right? There's almost no resource like who you have today or YouTube you have today, where if you are inquisitive enough to want to dig into just about any subject area, right? Without even any referral, drown in the resources you find by just a simple search, right? On either YouTube, if you want videos, you don't want to read, you want to watch videos, you want to listen, do YouTube. If you want to read, right, you do Google, right? And just about any topic you want to dive into, I'm very certain drowned in the information without even any particular reference you get to resources. So what you need most is be that inquisitive mind, right? And identify what you are interested in digging into. Once you identify your own area of interest, I mean, the space is very large. It can't be everything, right? Look at everything that you're seeing in space and identify the areas in the space that seem to catch your interest in and drown yourself in knowledge. And before you know it, you wouldn't know when to start sharing that knowledge and become a subject matter expert. That is how people choose their names, right? So, I mean, the resources in your hand, just do a search on anything and then go for it. YouTube.
100% adopted. I concur. That's how it works, please, Mercy. But just so you're not too lost in the forest of information out there, what I can do, I can share one of my slides on the subject with the JIIPCC platform, so that they can make it available to persons such as you. I hope that can help. I also have a slides presentation on how persons can, like George was saying, can find their way, identify your own areas of strength, and be able to play to that, to create opportunities for yourself. Because what works for Mercy may not work for Mustang or work for Ramon, right? We all have different, motivations. So I'm going to share that with the platform so that they can make it accessible to you.
Thank you so much, sir, for that. We were so engrossed in the class, we didn't even take pictures for our social media pages. So I'd like us to turn on our camera, please, and give a big smile to the camera. I'll be taking screenshots. Okay. Susie, your camera is off. I don't know why. A big smile for the camera. All right, that will be all. Thank you so much. I think this brings us to the end of the session. As a closing remark, I would like to thank our mentors for taking time out of their very busy schedule. I'm sure today was meant for rest, but we took more than 2 hours out of your time. So we have no words to thank you. We are very grateful to our presenters from the groups. You did a wonderful job. Your presentation was on point. And I hope you took corrections from our mentors, from what our mentors had to say. Thank you so much for your time and efforts. And I hope everyone enjoys the rest of their weekend. Thank you so much.
Thank you. Bye.
Bye.